let's get what I spoke about earlier, about the global markets, which were rattled late last week as China shut down the country's cryptocurrency space, while its property giant Evergrande wobbles, sending major markets around the world into a frenzy. Let's find out if the storm is over now. As we bring on Howard Minnis, global market strategist and managing partner at Howard Minnis Asset Management. Great to have you on the show this evening again. Howard, we appreciate your time.
Thank you, boss, and thank you for having me.
Yeah, we'll get to the frenzy of last week in a short while, but let's just ask where we are today. How are we taking off after last week, very frenzy? We now hitting home with the final days of September and the end of the third quarter.
Yeah, we're just seeing a bit of, should I say, correction from last week, significant downside pressure in the market as a result of fear of contagion risk and also the possibility of the Federal Reserve looking to aggressively kick off their taper process as regards to their accommodative policy going into the end of the year. So we saw that downside momentum really picked up intensively during last week market trading times. But however, we're seeing a bit of, should I say, relaxation in that downside pressure right now. We can see some correction in the market trading higher. But there's not so much optimism really yet at the moment. We're still experiencing some caution in the market as investors and market participants are not exactly sure the extent of the problem with Evergrande and how much of a contagion risk these real estate giants are moving to the rest of the market.
Yes, but what is normalcy back in the world of cryptocurrency? Let's start with that. After last week's China-induced shakedown.
No, I think right now it's going to be hard to use the word normalcy and cryptocurrency really in the same sentence. I think going forward we're going to be seeing that erratic trade in this volatile digital currency, and as government bodies, even financial institutions, and even monetary policy giants would start to understand what exactly they are dealing with, why they are trying to curb that volatility risk that is attached to this asset class, really. So I think as we are getting to understand this asset class, we'll be getting to see some of these things play out in terms of news, maybe some other regulatory setups or framework being affected by both governmental institutions and also financial institutions.
But do you think that, this is China leading the way in hitting the cryptocurrencies market? Do you think there will be, it could be a replicate of this? Do you think other jurisdictions will come out? Do you think there are more headwinds in terms of regulations ahead, even in the more developed, stable markets, like advanced market like the US? Do you think perhaps the SEC and others could be keeping one permanent eye on what China is doing and say, hold on a second, maybe we too should knock the crypto markets and the industry around a little bit, tighten the news, as it were?
Yeah. I mean, if China is looking to crack down, I mean, they are supposed to be, should I say, the black sheep of the
market family.
Market, really. So if they are saying this is problematic, I'm pretty sure other countries, other developed markets are also looking at it and saying, well, maybe there's something here that we really need to pay attention to. And I think China itself, what they have been looking to do in the last couple of recent months is highlighting how over-leveraged the global market is, and they're literally trying to cut down on those excesses just in case there is a global meltdown.
Okay, so here we are at home. We're coasting towards Friday, the big day, as it were, for Nigeria's eNaira. But here is the new platform that the news says, sources says, has gotten more than 1 million hits already, because even before the October the 1st. How do you respond? Here we go, isn't it? Here comes your eNaira. Smile, everybody, for the camera.
Yeah, I think it's a welcome development, really. I mean, I've tried to go through the 54 pages of the operational setup the eNaira, and it looks quite interesting. When it comes to ease of transaction, cost of transaction, and also the time of transaction, I think this is going to be a huge plus in terms of when it's been implemented. But however, I don't know from a monetary policy stance what exactly the plan is really. These things are not exactly black and white. There are a lot of, should I say, infrastructural framework that needs to be taken care of, and how it really reflects into the general economy, really. So I think maybe with time we'll get to understand what their plan is as to how this will probably maybe reduce pressure with the Naira against the US dollar, and then maybe other G7 currencies. But I think it's a welcome development. If this can be implemented effectively and efficiently, I think it could really ease a lot of financial transactions really going forward.
Well, whatever happens on October the 1st, Uchenna, I've got my real Naira here, by the way. Yeah, whatever happens. Yeah, I got my real Naira here, by the way. So I'm going to put that in my pocket. Welcome eNaira on February and October the 1st. I'm going to take the ringside seat and see what it looks like. In the meantime, I'm keeping this here. Uchenna Minnis.